Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 19th of November, 2018, about 1:40 p.m. Central Daylight Time. As you can see, a down day in the grains, and no surprise, Vice President Pence and Chinese President Xi did not do well at the APEC meeting this weekend, and that sort of sets the tone for the G20. You know, everybody's counting that President Trump and President Xi will get along at the G20 and get something positive done. Vice President Pence obviously took a more hawkish attitude. The Chinese didn't like it that much, but that's okay. It doesn't mean that everything's off the table just yet. Also doesn't mean anything's on the table. And the market looked at that and dropped the beans down. You know, beans are the market that would get the most reception because we know China needs them regardless of what they think of us. The question is one of trade. In the stock market, you can't get out of the way of Boeing, Apple. These markets just keep getting beat up and they're carrying the markets down. Where's that year-end rally, right? That's what we're all asking ourselves. Will we still get one? I think the idea of new highs at the end of the year, I think that's off the table from looking at the chart formations. Anything's possible, but I don't buy into that. Can we get a good bounce away from this? Well, that'll be the big question. And one of the things helping is the fact that energy prices are stronger. They're starting to, if you will, get traction down here. The $55 area in the crude is starting to look like an area of interest, 65 in the Brent. But let's go back and take a look now, if we could, at the weekly area chart of closes in beans. And as you can see, the market had been coming up. All of a sudden, this close takes out that break low there. I'm probably going to have to change that word up thrust to down thrust until you get back over last week's high of 17 up 17 at 892 and a quarter. The fact that you were able to break through this break low and close under it is not good. It sets into play the possibility of challenging the 18-week average of closes at the 859 level. When you take a look at the daily chart, I'm still going to say we're caught in between the peak here and this valley right there. That seems to be what's defining the current trading range. The market has a pattern now of a higher high and a lower low. That is not the definition of a trend. I had mentioned, and I'll come back to this, had I done an update on Friday on the daily charts, I would have said look for support between 875, 874 and a quarter, the 18 and the 100-day average of closes. You did close under both by a fraction, so I'm still considering that the potential support zone. Let's assume that gives ground. If it gives ground, you put back into play the possibility of the lower Bollinger Band. If the market rallies, the trick will be to stay over those two numbers, and you'd have to go all the way up here to 897.5 on this current chart formation to do anything to say that the upper Bollinger Band is going to be in play. When I take a look at momentum, you had gotten, let's go back to Friday, very overbought. Now the market is coming down and correcting that situation. Already both numbers are back under 70. You've left the overbought situation. When you come to meal, you're caught at the upper Bollinger Band. You couldn't go anywhere on Friday once you got up to it, and bang, you're right back underneath, actually, the 18-day average of closes. Momentum here trying to turn down, hasn't quite done it. I think you're caught in this barrier of the upper Bollinger Band, right here, the black dashed line in this one. Remember, the whole idea of Bollinger Bands is that the top band is a resistance, the bottom is support, and you always look at the angle that they've got. Sideways often means that you're going to spin around in there and churn up. You look for breakouts to the downside or upside by two moves outside of that band in succession, ideally. When you look at soybean oil, you've got the embedded reading to the downside, bearish. The market had a rally, unable to hit even the 18-day average. Now it's back down. Hit today, got down to 27.45, the Bollinger Band, and seemed to have found some semblance of support there. But the overall pattern of this market, you have downside bias, you got an embedded reading. That's the most bearish thing you can have on a chart when I look at it, down into a support zone. In the corn market, down into the lower Bollinger Band for the support. Now remember, settling outside of a Bollinger Band does happen about 5% of the time as it happens on the upside. But more times than not, I look to see what the pattern is, and the pattern right here is sideways. Now, if you were to close under the band and start bending, then I would argue, okay, you're breaking out of that. In Bitcoin, go take a look. You'll see how that broke out to the downside. In the wheat market, pretty much sideways action, now trying to break out to the downside. So all the grains looking pretty bad. Lower highs, lower lows. Does one sell outside of a Bollinger Band? That's a question that often comes up. I don't tell you in these tapes to buy or sell anything. I'm just saying that the odds say that you can do better than selling outside or buying over a Bollinger Band if you look at them. In the sugar market, tomorrow's D-Day. In looking at this, you did not lose the embedded reading, but unless this market gets underneath today's lows tomorrow, the odds favor it's going to lose that embedded reading and make a run back to that 18-day average of closes. Tomorrow's a very, very important day. If you take out 1261, you break this pattern, you keep the embedded reading, and that puts into play these lower numbers, the lower Bollinger Band and 18-day average. Stay up, you put into play the 18-day average of closes. In the coffee market, you had an outside day up today. Again, I want you to look at this green 100-day average of closes. That has been the support. So now you have a market with an outside day up. So you can say you've got higher lows. This high up here was 1715. Today's low 1700. I can't say that it's higher highs. I've got lower highs, higher lows. I'll leave my arrow there because you're an outside day up, and that should not be taken out on Tuesday or Wednesday. If it is, strong probability you go back down and challenge the lower Bollinger Band. Take out 1715, you put into play the 18-day average of closes. Close over that number, you'd have higher lows, higher highs, upside bias, and momentum turning up. That's what's necessary to get a trend change. In the cocoa market, the market is still fighting. If you take a look, you got up to the Bollinger Band. You have now fought at the 100-day and the 18-day average. You're trying to drop down. So we can say that the trend is down, lower highs, certainly lower lows here. Oversold. If the market stretches down, 2155, the lower Bollinger Band, is likely to be an area where those that are short try to take some money off the table. In the cotton market, the trend is down. Lower highs, lower lows, certainly seeing how poorly things went at the APEC conference with our vice president this weekend with President Xi was not a good sign for this market, and that puts into play the potential, doesn't mean it has to go there, of the lower Bollinger Band. You are oversold. Oversold conditions correct by one of two ways. They either embed, which this market is not even trying to do yet, both numbers or neither have stayed under as a group together under 20, so just oversold, or they embed by getting them both under 20, or a correction. So it's a correction or embedding. I don't know which they're going to do here. In the cattle market, you have the trend up because you've got higher lows, higher highs. That's where it ends. Okay, you've still got bias down because you're under the 18-day average and momentum up. So it's a market that I think is looking at this week's cattle on feed report as well. In the feeder cattle battlegrounds, the 18-day average of closes, you saw the market fell back and then came back up to it today, still fighting its battle there. It has a pattern of a higher high, lower low, nothing of real interest there. In the hog market, sort of throws everything out of kilter. Are the hogs up because of the fundamentals, or we keep seeing so many cases of swine flu in China, and there is a lot of hope in this market that that's being the United States and China, can get together and talk at the G20, and maybe that would open up the hog market for export. On the other hand, look at beans, down 18 cents. I don't know. This market's up at the upper Bollinger Band. I'm looking for that to be an area of resistance in the market. But when you get these thinner traded markets, they just move on a dime. We'll be writing about this and a heck of a lot more. In fact, if you get our market research, you should read the hog comments today that John Ginzel put out. Pretty interesting. But you just give us a call. You can go to our website, www.iraepstein.com. If you're an ag trader, you're going to love what we put out. I mean, we're heavy on agriculture in our research in this firm, and you'll be able to find out what we tell producers, users, what we're doing for arbitrage. In other words, if you're cash versus the futures, yes, that can be in some of these markets, and especially in the grains. How do the elevators work? What we're telling you about that. All this, and you pick the subjects you want to get. How do you get it? It's simple. Call us at 866-973-2077. Go to our website at www.iraepstein.com, or simply click up here on YouTube. It'll take you right to our homepage. Just click on anything and fill out the forms. I'm Ira Epstein. You have a good day.